My name is Steve Jackson. I'm the Senior Vice President of Strategic Development and Channel Sales here at PrimePay, and we want to welcome you here today to one of our monthly broker webinar series here in June. We are thrilled to have you. Thank you for taking time out of your busy schedules to sit with us today. Many of you have been on our webinars before, and we thank you for returning. For those of you who are new, we do want to just try to share a little bit of what we are doing here today. So just to kind of lay a little bit of the groundwork, today the broker webinar is actually a CE approved. It's CE approved for 1 credit hour. And we have just a few kind of requirements for today's CE that I want to go through, okay? So just as if you guys were sitting in a classroom and you were listening to an instructor, there are certain levels of requirements that's needed for each and every CE. And so let's go over just a few of those here today and just make sure that we've got our groundwork scheduled, because we've got a lot of good content here for you today. So today's CE it's approved for 1 hour in the following states. So we've got Connecticut, Pennsylvania, North Carolina, Virginia, New Jersey, New York, California, and Illinois. There are many states, just so you guys know, that do not permit an online CE webinar, and so we're unable to provide the course at least on a webinar fashion and at least approve it for CE. And we do our best to try to get as many of these approved as we can, but we are thrilled to bring kind of this the second CE webinar event here this year. So another credit hour for each of you who's approved in those states. One of the things, too, second bullet point is you must be registered as an individual to receive credit. I know many of you on our other webinars will view as a group, and generally that is fine. But as a CE, if you want to receive the credit, you do need to register and watch this individually, okay? So do not be viewing this as a group for credit purposes if you need the credit, okay? You also, and this is from time to time, I don't want to sit there and say that this is 100%, but you may experience difficulties of viewing on a tablet or a mobile device. We are going to ask you to participate, and sometimes on that mobile device and or tablet, there have been issues with the participation level. So we just ask that you're at your laptop, your desktop, in regard to viewing this webinar here today. That brings us to actively participating in this webinar. What we're going to do is ask throughout the webinar a series of questions, and I need each of you to answer those questions. So those receiving credit, I need you to respond to the question being asked. It's not about you getting it right, okay? It's just a matter of you participating. We need to show activity from the start of the webinar to the end. Lastly, then, at least, what I want to cover is the attendance sheets. Each of you, or for some of you who have just momentarily registered for this and have logged into the webinar, you may not have received an attendance sheet. But for the most part, many of you have already received an attendance sheet from Laura Kennedy, and what you'll need to do is complete that attendance sheet, fill it out, sign it, and then return that sheet no later than the end of day on Friday, June 6th. So for those of you who just signed on like just a moment ago, we didn't have an opportunity to get an attendance sheet, that's fine. We will get that out to you here once the webinar has been concluded, okay? Next, too, we always record this presentation. Get questions quite a bit as far as receiving, a recording of the presentation. In our follow-up email to you, we will always include the recording, but also to the slide deck. Okay, so that you can review that at your leisure. Next, too, is just questions. We want your questions. I realize with the content that we have, I'm not going to be able to take the questions and address them immediately through the webinar. But what I'd like you to do is go to your the question bar in the GoToMeeting menu and go ahead and type in your question. And what we will do is we will then, in our follow-up, whether it's by Friday or next week, we will provide you with an FAQ of all the questions and answers, which I think is very valuable. A lot of folks have commented on receiving that information and have really appreciated it. All right. And so lastly here, take some notes. And I don't know if I can sit here and say enjoy, because as we talk about Erisa compliance, Steve, I'm going to enjoy this. Erisa compliance? Yes. I think you will. I think you're going to learn a lot today. What we try to do in each of our webinars is take a lot of the technical jargon that you're going to see, and you will see a lot of that today, but also try to bring it down to a practical level. You know, just so you guys know, when we look at our top 3 business issues of our clients here at PrimePay, one of the top 3 business issues is compliance. And Erisa fits right into that category, and it's something that has been kind of near and dear to our hearts, so we wanted to share this with you here today. So what I want you to do is get to your computers. We are going to do our first poll, and some of these, again, these are going to be softballs. But I'll let you know when they're a hard ball, when it's a little harder. But what I'd like you to do is go ahead and go on the screen. You can click on the answer that you think that it is. So what do the letters in Erisa stand for? Is it the first year, Employee Retirement Investment Securities Act? Second, Employer Reinvestment Income Second Act. Third, Employee Retirement Income Securities Act. Fourth, Employer Revenue Income Securities Act. And then lastly, every ridiculous idea since Adam. Again, there is no, well, there is a right answer, but I just need you to participate as part of that. So I'll give you just a little bit more time. You guys are doing great. You guys are doing fantastic. Go ahead and just click on the button that you wish to select. Just about 5 more seconds here. Okay, we're going to close the poll, and let me share that here with you. So what you're going to see is that most of you got that middle part, the Employee Retirement Income Securities Act. 72% of you selected that, and that is correct. Now, I can't believe no one selected the last one. Come on. All right, I threw that in there. All right, well done. It is not that first one, but the second, Employee Retirement Income Securities Act. Well done. All right. So let's get into the course agenda here today. Like I had mentioned before, we do have kind of an action-packed webinar here for you today. As is our custom with a lot of these webinars, there's usually one good piece of legislative update data that we can actually talk over with you. I want to take a very short amount of time, but kind of cover one legislative update that I think will be very important to you all. Secondly, then, we're going to just take a real broad, nice, easy definition of Erisa, okay, Erisa 101, and just kind of cover some of those key points as it relates to certainly really just defining Erisa. What to look for. You need to know what to look for in your clients to ensure that you're asking the right questions. So let's do that. Next, we're going to cover the benefits that are subject to Erisa, very important. But also, too, let's ensure that we understand which employers are subject to Erisa as well. Okay, I think there's confusion on both ends, so let's try to bring some clarity to that. We then want to focus, and this is a real key area, key Erisa requirements. We're going to go in as in-depth as we can, as we need to, for this overview in regard to the main Erisa requirements. And then lastly, as I mentioned, to turn this into a practical measure here, because we want to take, we would like you to take the information you received today and be able to go to your clients right now and be able to kind of walk your clients through the process. So we want to try to talk through at least a little bit, kind of guiding your clients through it all. So the first item that I wanted to discuss, at least with you, is our legislative update. And this refers back to the initial notice from the IRS, and also in conjunction with the notice from the IRS was the Department of Labor. But we're going to specifically look at the notice here for 2013-54 that came out last September. And if you recall, it was kind of a, I had to read it I don't know how many times, but if you read it, you probably did the same thing. Lot of information in there in regard to employer payment plans and how a tax-favored or pre-tax benefit account could be used to reimburse individual medical premiums, right? A lot of confusion around that. We held a webinar early in January, I think, specifically to that to try to drive more clarity. I think we did, but there's still a lot of questions. However, I think the debate is over. So on May 13th, all right, so just a few weeks ago, the IRS issued a Q&A response to the following. All right, and if you guys had seen this, there were only 2 questions, but the question centered around the Notice 2013-54 and brings real clarity to whether an employer who does not offer a group health plan, can they reimburse employees on a pre-tax basis for premiums, for premiums for individual health coverage. So the actual question here was, if the employer does not establish a group health plan, may an employer reimburse employees on a pre-tax basis for premiums they pay for health insurance? Now, one of the things that was stipulated in this, they had talked a little bit about after-tax contributions, and I'll touch on that here in just a second. But in regard here to pre-tax basis, it has specifically stated that these employer payment plans, that's what they call these, so anything under a Section 125 plan, so like a POP plan or a premium reimbursement account, okay, a PRA, or a Section 105 plan, so certainly commonly referred to as more of an HRA, a health reimbursement arrangement. It states this: these employer payment plans are considered to be group health plans, which means that they're subject to all the market reforms, okay, generally speaking, all the ACA market reforms, which includes the 2 key areas of these reforms, the annual limits, no annual or lifetime limit, okay, prohibition, and then also the requirement that preventative services be covered at 100%, okay? So it says that such arrangements cannot be integrated with individual policies to satisfy those market reforms. So therefore, the answer is no to that question, that such an arrangement fails to satisfy the market reforms and may be subject to a $100 per day excise tax per applicable employee, which when you run your math, that's $36,500 per employee per year. So what the IRS did not do previously, but now has done now, it's clearly assigned an excise tax or penalty if an employer is found to be taking pre-tax dollars, giving them to the employees for them to go and purchase individual health insurance policies. Now, one thing that I also want you to note as part of the original question was that they clarified that it doesn't matter whether that individual premium is purchased within healthcare.gov, okay, inside the marketplace, or outside of an exchange, outside of the marketplace. So they basically have cleared that up as well. One other thing to note, there was a brief blurb about after-tax contributions, and this tax or penalty does not apply to after-tax contributions, but I will say, and some of the attorneys and folks that we have talked to, an employer just wants to be cautious, in regard to providing after-tax money to employees. For them to specifically use that money for individual medical premiums. At the end of the day, if the money that the employer is providing it's considered taxable, it's considered compensation. So as long as they're consistent, you just need to be cautious. But you should be able to use after-tax money clearly to pay for individual medical premiums. So in our minds, this debate is over. Okay, the IRS has come out pretty explicitly in saying that you cannot use any pre-tax benefit accounts to pay for individual medical premiums, whether they are within the exchange or outside of the exchange. So believe me, that doesn't give me great joy, but that is the rules here nonetheless. All right. So I want to kind of get into the classroom here and provide some key definitions for Erisa. I just want to lay as good of a groundwork as I can in regard to what Erisa is all about. So if you really think about it, most legal concepts regarding employee benefit plans, they come from the Internal Revenue Code, right? They're the IRC. And I even wrote or, but it's really and, the set of federal laws under Title 29 of the United States Code, and then it's, generally under the jurisdiction of the Department of Labor and EBSA, right? So just to kind of break it down further, not to get too granular, but the set of laws is generally referred to as ERISA, and it's sometimes further broken down into Title I, which fits most of the laws, okay, and then also Title IV, which is governing more of the pension insurance system, okay, under ERISA. So in 1974, as you may be aware, Congress passed and President Gerald Ford signed into the law this comprehensive rethinking of the employee benefits law, which is known as the Employee Retirement Income Security Act of 1974. It did make major changes to the Internal Revenue Code, and it's even making more of a head spin here today just due to ACA, and we'll talk a little bit about that. Title I, as you see there, covers employee benefit, welfare benefit plans, and pension benefit plans. It basically breaks up employee benefits into two parts, employee pension and employee welfare. So we're going to talk about both. As I talk about ERISA, we're talking about how ERISA applies to both. I am going to concentrate on focusing the energy today around health and welfare benefit plans, okay? But there is such a distinct and very strict guideline that has to be followed for pension plan benefits under ERISA, just as the health and welfare benefits as well. So, ERISA, just moving forward, for most employee benefit plans, ERISA requires kind of these three key things, and we're going to take it even a bit further here. We're going to take it even a bit further here as we dig into this a little bit deeper. So one, it requires detailed disclosure to covered individuals. Okay, so think employees and beneficiaries. Okay, individuals, employees and their beneficiaries. Also, detailed reporting through Form 5500. And then lastly, which may be more tied to the pension or retirement plan side of ERISA, but it also applies to your health and welfare benefit plans in some instances, and I'll explain that here in a little while, but also a strict fiduciary code of conduct on plan sponsors and administrators, okay? So I guess I want to paint this picture for you, if I may. You guys, most of you are familiar with a Section 125 plan, where an employer will, offer a group health plan. They now are shifting some of the cost of those premiums to their employees, and so employees begin to take a payroll deduction for the cost of participating or enrolling in that plan, right? We all are very familiar with that. Now, that employer has two options, okay? That employer could allow the employees to pay with after-tax money, which they could do, okay? Or they could permit their employees to pay with pre-tax dollars, okay? Now, if the employer wishes to allow their employees to pay with pre-tax dollars, that employer is obligated to establish a Section 125 plan. Okay, and it's going to require the detailed disclosure, for the covered individuals. For a standard POP plan, there's not a 5500 filing, but there's the ERISA component comes into play with a Section 125 plan. And what that employer does is they go out, they say, hey, I'm going to pre-tax this benefit, and then establish a document to ensure that their plan is in compliance. That's ERISA. I mean, if you think about ERISA and the requirements that ERISA provides for, if you're going to establish a health and welfare benefit plan for your employees, hey, look, you're going to need to have that documentation and disclosures to each of those covered individuals. One thing to note here, and just in the statement below, ERISA also creates a federal mechanism for enforcing rights and duties and preempts a large body of state law. So please keep that in mind as far as the preemption of state law, but also we're going to cover kind of the real emphasis of the enforcement capabilities of participants based on this law as well. So in thinking about a Section 125 plan, right, so I kind of laid out, for a Section 125 plan, you need to have your plan documents and your summary plan descriptions kind of in place. You've established a plan. So if you think about this, there are three basic elements of an ERISA welfare benefit plan. One, there must be a plan, okay, a fund or a program. That's pretty easy to understand, Steve, right? As an employer, okay, I need to adopt a group health plan, and okay, yes, that's a plan. So there must be a plan. Secondly, one that is established or maintained by an employer. So we are talking about employer-sponsored benefits, okay, group health plans. And number three, this is established for the purpose of providing one or more benefits to participants and beneficiaries. Okay? Now that's a very simple definition, but it highlights the fact that as you're establishing these group health plans with your employers, there's a good chance, right, because there are some exceptions, but there's a good chance that each one of those plans that your client, your employer has adopted are covered or need to comply with ERISA. So very simple definition there. I thought that I'd at least pass on to you there. So now let's go to poll number 2. Get to your questions here. All right, and I'm going to launch this. So again, just need you to go to your computer and go ahead and make your selection. So the second question is, who is ultimately responsible for ERISA compliance? Now, I haven't given you all the answers here yet, okay, to this, but I want your assessment of who ultimately, as you look at a broker or a benefits professional, are they ultimately responsible? The TPA, third-party administrator, responsible? A plan sponsor? A financial advisor? Or just none of the above, okay? So, give you just a little more time here. A lot of you have been voting. You guys are great. You're doing fantastic. So either a broker, TPA, plan sponsor, financial advisor, or none of the above. Just give you here another 10 seconds. Good job, everybody. All right, I'm going to close the poll. All right, let me share that here with you. So I think most of you have certainly the correct answer here. So 86% of you are correct. The plan sponsor, the employer generally is who that's going back to. Ultimately, at the end of the day, each one of these players, because I'll talk a little bit about this, can a broker, a benefits professional, be responsible? Well, you could, based on how you're listed within the ERISA plan, right? A third-party administrator absolutely could be held responsible based on their involvement of maintaining that ERISA plan. Of course, plan sponsor, but a financial advisor, maybe more so on the retirement plan side of the aisle, but absolutely a financial advisor could become responsible for an ERISA plan for a client. But you guys were correct. 86% of you there, the plan sponsor. That is right. All right. Well done, everybody. So let's touch here on the cast of characters. As we think about an ERISA plan, the ERISA, I guess if it was a movie, if it was a production, right, and you're the director and you actually need to combine all the cast of characters that are going to represent this ERISA compliance plan, okay, for your clients, what does it include, okay? So the first here is one, as I mentioned here before, the first component, the three elements to ERISA is you need to have a plan, right? So first off, that employer must have a health and welfare benefit plan that would need to be ERISA compliant, which we'll talk them over. Let's say it's a medical plan, it's going to be an ERISA plan. Secondly, plan sponsors. I think one individual had sent me a note here just in the question box, and yeah, kind of a little bit of a quick trick question there in regard to who is responsible. But the plan sponsor, the insurer, can also be very much the sponsor and be responsible for the ERISA plan. Generally, within the documents For ERISA, you are going to name a plan administrator. That plan administrator could be a third-party administrator, could be someone from an employer basis, an advisor, what have you, but you're going to need to name an ERISA plan administrator. You also need a plan that is providing a benefit that's part of the third element, right, of an ERISA plan that's driving a benefit to participants and beneficiaries. Okay, so we're going to need to drive information specifically to those participants and beneficiaries. Next, named fiduciary. So I'll go into a little more detail here in regard to fiduciary, but within the plan itself, there will be a named fiduciary. Could be the employer, someone in the employer. Could certainly be a trustee that would be actually the fiduciary of a particular ERISA plan. You would also name other ERISA fiduciaries, kind of the supporting cast, right, of characters. You've got your fiduciary, but then you could have other ERISA fiduciaries based on the specific type of authority that someone might have as part of that ERISA plan. Next, clearly, insurance companies. You've got insurance certificates and contracts that are being established. Insurance companies are going to be greatly involved, clearly, in that specific ERISA plan that is being offered. Next is third-party administrators. Now, this varies based on the type of plan or offering that you may have as an ERISA plan, but clearly there will be generally third-party administrators that are helping in the plan administration of that specific ERISA plan. And then lastly here are trustees. We'll talk a little bit here today about plan assets and whether an employer is paying premiums out of general assets, or have they segregated those assets in a specific plan? Is it in a specific trust? And so depending on how the employer ultimately needs to fund their ERISA plan, a trustee absolutely can be involved. So think about that cast of characters. I mean, there's a lot of language now that's got to flow for each and every one of these, but these 9 kind of characters are all very important as you talk with your clients about whether they have an ERISA plan or not, or if they have documents or not. Okay? Plan document requirements. So I'm going to dive into the documents here in just a little bit in regard to what exactly is required. But one point that I want to make is that the plan document requirement applies to each plan an employer maintains. Now, we'll talk a little bit about wrap documents or umbrella documents. It's certainly possible, as you see there, the third bullet point there, bundling ERISA plan. So you could create a plan document that is a wrap document, and there are several plans that flow underneath that. That's certainly fine, but in essence, that goes to the first bullet, that each plan that an employer maintains must have a plan document, okay? So whether it's a wrap or an umbrella document versus just an individual document for each plan, each ERISA plan must maintain a plan document. Secondly, there are no hard and fast rules, for a number of plans. Each employer is going to have their series of health and welfare benefit plans. Generally, what they state, employers are free to determine the number of plans it has for ERISA compliance purposes, meaning that they can bundle plans together. They don't have to bundle plans. If they want 7 different ERISA plan documents and separate plans, have at it. The more the merrier, I suppose. Or, depending on if you're filing Form 5500, you might want to bundle those together. You might want to have a wrap document that kind of encompasses a lot of different documents. That way you're maybe filing once instead of 7 different times, okay? Just a note, I wanted to put it in here in regard to bundling. There is certainly an opportunity for employers to bundle ERISA and non-ERISA benefits together. You could do that in the same plan. That doesn't make these non-ERISA benefits subject to ERISA, and I write the word generally. I guess you're going to see that word quite a bit here today. but generally speaking, it's not going to make them subject to ERISA. Now, it might make them subject to other requirements, and I would say seek your ERISA attorney, what have you, in regard to kind of understanding what, Should you mix and match? Should you put them together? So on and so forth. I want to provide a definition here as far as Erisa 101 here, and just talk here shortly about fiduciary duty. So a fiduciary for Erisa, okay, it's anyone acting in the capacity of performing Erisa fiduciary functions. They would be considered a fiduciary then under Erisa, okay? And I highlighted kind of these 4 key things. So are they exercising discretionary authority over the management of the plan? Generally speaking, an employer, VP of HR, organizational development, maybe it's a CEO, maybe it's an owner. Clearly, they are exercising discretionary authority over the management of a plan. 2, are they exercising discretionary authority over the plan assets? Now, in many cases, as we will discuss, employers for most of our health and welfare benefit plans, they're paying out of the general assets of the employer. And when I say general assets, folks, I'm just talking about, you know, that employer's not setting up a separate account and naming it the Erisa Health and Welfare Benefit Plan, okay, and putting money in that account and funding it. No, they're just taking and paying the premiums or what have you directly out of their operating account, you know, out of their general assets is what that means. So are they exercising discretionary authority over plan assets in a retirement plans plan, Erisa plan? Are they rendering investment advice? And then lastly here, do they exercise discretionary authority over plan administration? All right, so when you look at a health and welfare benefit plan, maybe number 2 and 3 or the second and third bullet point is not necessarily going to apply, but it clearly the first and the fourth, absolutely, you have a fiduciary relationship, and a fiduciary would be named in any Erisa plan. Secondly, general decisions that are made by a fiduciary. So again, what I want you to do is just begin thinking about your clients and how they conduct the decisions behind the implementation and administration of their health and welfare benefit plan. So do your clients, do they sponsor one type of benefit plan versus another? Usually there's not just one, there's 2 or 3 or, you know, whatever it may be. Secondly, do they amend their plan? Do they change the plan options? You guys can name how many clients that have done that. Thirdly, requiring employee contributions. Not many employers that are providing a 100% paid benefit. They're usually determining what those employee contributions would be. General decisions also include the termination of a particular plan, or certainly a portion of the plan if it needs to be amended. And then lastly, you can easily have a TPA that has some discretionary authority. So as you talk with your clients, you need to ask the question, so your TPA, what kind of discretionary authority do they have over that Erisa plan, okay? So, I mean, as you think through some of these just general decisions that would be made by a fiduciary, you quickly surmise that you're probably talking to that individual that is making those decisions within that company, and they would be considered that fiduciary. Every fiduciary must be bonded, okay? So there is a bonding requirement. Now, I think I put here, there is some special exemptions, and I'll touch on that here in a second. But every fiduciary must be bonded. It protects the plan from losses due to fraud or dishonesty, okay? It must be in place at the beginning of the plan year, where the bond that is received or purchased is at least 10% of the funds handled during the prior reporting year, and it is subject to a minimum of a $1,000 bond and a maximum of $500,000, okay? Now, as you see there to the right, the special exemptions. No bonding is required when premiums are paid from the general assets of the employer. Now, I would say for the majority of your clients that you know of, they receive that invoice from the carrier, let's say, and they go ahead and write a check right out of their general checking account, operating account, and pay for that specific expense, right? So that's coming from general assets, all right? So that specific item there is no bonding required. Where you do see bonding more required is certainly going to be in the pension or the retirement plan side of the aisle. And then lastly there in that little special exemptions box, no ERISA bonding for banks, trust companies, and insurance carriers. All right. So which plans and employers must comply with ERISA? Which ones need to comply? Now this is the fun stuff. This gets into a lot of the planning decisions and you helping that employer through that decision process as far as what applies or it doesn't. So plans that must comply with ERISA. You have medical. Okay, medical plans clearly in the definitions for ERISA. So if you think about it, so an employer, so to think about to the three elements of ERISA, you've got I have to have a plan, it has to be maintained by the employer, and it needs to be for the benefit of employees and their beneficiaries, okay, or participants and their beneficiaries, right? So a medical plan, surgical, hospital care, those plans are going to be considered ERISA plans, so right in that bailiwick. Dental, so group-sponsored dental and vision plans, all right, will also be considered ERISA-based. A health flexible spending plan. All right, so a health FSA, not a dependent care account or a PRA account, none of that, but a health FSA must comply with ERISA. An HRA, health reimbursement arrangement, so under Section 105. And let me, I'll just go up real quick, digress, but for the medical, that's fully insured and self-funded. Okay, fully insured self-funded plans, all right? Of course, self-funded fall under Section 105, so they would need to be ERISA compliant as well. Now, I've listed here just a few other exceptions that may apply depending on the type of benefit that is being offered, okay? So these here are exceptions. They could be ERISA compliant, not always, okay? Except maybe for that last one there that I'll show under voluntary benefits. So wellness and employee assistant programs, EAP programs, some of those that are considered, if you think about it, like COBRA, if they are considered COBRA qualified, you probably run into an instance where it's going to fall under ERISA. If it is not considered a COBRA qualified type of a plan, I would say it's fitting outside of the definition. But that does need to be looked at a little deeper. We need to look at, you know, that specific wellness benefit that the employer is providing and make a determination. Secondly, sickness plans, accident, disability, death, or unemployment, all of those are generally not going to be ERISA compliant type plans. Severance insurance policies can be a plan that fits under ERISA. And so a lot of employers do not have it, so just depending, though, on your specific policy and how you structure severance, it could flow under ERISA and would need to be covered. The last item here is voluntary benefits under Section Code 125. Now, I'd mentioned before, I had talked about a premium-only plan, you know, Section 125 plan before. It needs to have a plan document. Which is correct. Within that plan document, there is specific ERISA language and special enrollment rights. It talks about COBRA and HIPAA and all of those things. So the plan document that supports a voluntary benefit plan that is reimbursing those premiums on a pre-tax basis, generally speaking, you do not need another ERISA plan to cover those benefits. Why? Because the Section 125 plan document is covered. It covers the ERISA component, okay, specifically for those benefits. And we can kind of touch a little more on that here in a little while. So again, with the vast majority of the health and welfare benefit plans that you are going to be dealing with in talking with your clients, these amounts are generally paid out of the general assets, you know, of the employer. Okay, and so a lot of the bonding requirements and those things are certainly not going to, you know, come into play. Employers. So employers that must comply. So I've already got a question on this, which is great. Thank you for asking. So I'm going to cover it here right now. So it says that generally all employers will be subject to ERISA. Hey, but Steve, wait. I mean, if I have an employer size of 1 or 2, they're not subject, right? Yeah, generally all employers will be subject to ERISA. So there is no rule here for 1 or 2 employees. If they are offering a group medical plan, then that plan, if they have 2 employees, would be ERISA compliant. It's a health and welfare benefit plan that would be need to comply with the ERISA requirements. So all employers will be subject to ERISA, but for these just few exemptions, okay? Government types of entities, certainly churches, they would be exempt, all right? And then I just listed here just programs maintained solely to comply with state law requirements, and I won't go into those details, but basically it's kind of all the others. But in essence, I wanted to make that first statement as all because that's really the requirement. Any employer that you're working with, again, government, church, related, those employers and their plans are going to need to comply with ERISA. So just note, regulations do exempt certain voluntary employee pay-all arrangements. So you can have an employer that offers a medical plan, but they offer maybe some other supplemental benefit, could be tied to ERISA, but there is an exemption that where an employee, if they're paying for all of the premiums, all of the contributions, then there would be some exemption. But keep in mind, that particular benefit would probably be covered under Section 125 anyway because the premiums are being taken out pre-tax, and so that Section 125 plan document is going to incorporate the ERISA language in there anyway. So you've got some coverage there in any case. All right, we are now at our next poll question. So get to your computers here, and I will launch this next question. All right, sometimes I lay up some softballs, right? All right, this is one. I'm not trying to be tricky here, okay? So, other than certain exemptions, all employers can be subject to ERISA. True or false? All right, this one will be shorter. You guys are doing well. All right, just give you here a few more seconds. You are doing great. All right, I am going to just give you 5 more seconds. Okay, I'm going to close it. Well done. And let me share that with you. So, all right, well, 95% said true. That is the correct answer. Other than churches, government types of entities, you're looking at all employers, not small, large. All employers are going to be subject to ERISA. So 5% of you false. Okay, hey, you're just trying to be silly there. I know. All right, good stuff. Thank you. Let us move on. Let me hide that. All right. So now I want to get into documentation. I've seen some questions here that have popped up in regards specifically to documentation, and I want to cover that. We need to cover that as far as what is required. The required documentation, disclosure notices, and also the annual 5500 filing requirement. So the required ERISA documentation, I put this in quotes. It is out there time and time and time and time again, is that an ERISA plan must have a written plan document. So just like my example of the Section 125 plan, just to take that example just a bit further, this particular employer that I'm thinking of had been pre-taxing their premiums through our payroll service for a number of years, and they received an audit. The auditor went to them and said, hey, I see that you're pre-taxing premiums under 125. Fantastic, good job. I'd love to see your document. The employer could not produce a document and thus received a $25,000 penalty plus back taxes on all the years that they did not pay. And so what it fell back to in that example, as it does ERISA, is that you must have a written plan document. The document varies with the type of benefit. Clearly, you can easily have an ERISA plan document that has 13, 14 pages in it. You could have a document that's 30 pages plus, okay? Just depending on the type of benefit, how many specific plans is it covering, if it's a wrap or an umbrella document. Insured benefits require a wrap or umbrella type document, okay? So your medical, dental, vision plans, it requires this wrap, right? Because your insurer generally provides an insurance certificate or contract, if you will. And you would need to wrap an Erisa plan document around that specific document as well, okay, incorporating it into one document. This document must contain, and this is just a little bit, must contain the available benefits, how they're going to be funded. It says standard of review for benefit decisions. That's the appeal process. There are specific requirements under Erisa about appeals, how appeals should be handled. And so that standard of review is very important. As I discussed earlier, the named fiduciary, the language surrounding plan amendments and termination procedures, and also all the fun stuff, right? All the required provisions for COBRA, for HIPAA, for special enrollments, for USERA, et cetera. I mean, you could keep going on and on as far as the additional language that's added into an Erisa document. So this is just a rhetorical question. Don't go to your computers and push anything here, but rhetorical. Do carriers provide those things that I just stated here on the left? Think about it. Do they? All right, let's move on. Also required, so I talked about a written plan document requirement. I now want to talk about the probably the most important document that is needed, and that is the summary plan description. All right, very key. So if you think about the plan document, that's really the employer piece, if you will. Okay, the summary plan description is the employee piece. All right, of information that they need to have. So the summary plan description would go to the following, or given to the following: participants covered under the plan. Okay, so it must be given to each participant under the plan. This could also include COBRA qualified beneficiaries, call them QBs, sorry about the acronyms. It could be a parent or guardian of a child under a qualified medical, what is the child support, I'm trying to think of the word, qualified medical child support order. Yikes, got stuck on that acronym. It could also be the spouse of a deceased retiree who remains entitled to benefits. Okay, so it must be given to all of those folks, and it must be provided within 90 days after a participant first becomes covered under the plan. I say it a little bit later here in the webinar, but it also has to be given within 30 days of a request by an employee. Okay. Lastly, and I put this in here, there is no small plan exception. So again, going back to the question of, well, how big of an employer do we need to start complying? You know, is it like COBRA? You know, is it like 20 or more? No, it's 2. There's no small plan exception in regard to a plan document nor to a summary plan description. So do carriers provide this? Another rhetorical question. I don't believe so, but think about that actually for a little bit. Simple test. I mean, this is just a simple test. Does the insurance certificate or contract that is provided truly define who is eligible to participate in the plan? Something to consider. Notices, so when we think about the notices and disclosure section, I put summary plan description up there as well, because within the summary plan description there are many different pieces and parts of language that's within that summary plan description that talks about special enrollments rights, things of that nature that have to be provided to that to those employees. So a lot of the we'll say disclosures are actually found in that SPD. Now you also, if you make an amendment at any time throughout the year for that Erisa plan, you are going to need to also provide a summary of material modification, an SMM. And that provides the information as in regard to the changes. A summary annual report would be generally those greater than 100 employees where you're filing a 5,500, not always, but a SAR or a summary annual report may be required. You see that a lot in 401ks and whatnot. As part of ACA, the summary of benefit coverage is an annual notice requirement. Most carriers do that for your clients, for the employees, but that is a specific notice from ACA through Erisa. And then there's also additional notices for, excuse me, COBRA, claim procedures, certainly HIPAA. I talked about on the claim procedures, the appeals, how to go through appeals, so those claim procedures. HIPAA. You have WCRA. WHCRA. WCRA stands for the Women's Health and Cancer Rights Act of 1998. Now, WCRA, that's kind of interesting. It says women's on there, but it also can apply to men. So if you have had a mastectomy or expect to have one, you may be entitled to special rights under WCRA. And it states specifically that your health plan or issuer is required to provide you with a notice of your rights under WCRA when you enroll in the health plan, and then once each year. So again, as you think about WCRA and the qualified medical, order, child support order, and ACA, there's a lot of additional notices that are actually required now due to ACA, but also specifically due to or through Erisa. Again, another rhetorical question here that I want to provide. Do carriers provide these? Form 5500 filing requirement. It's filed annually. It applies to each Erisa plan with some exemptions. So every Erisa plan it would apply to, but they do have a small plan exclusion or exemption. So small plans with fewer than 100 covered participants at the beginning of the plan year, would be exempt and applies to small unfunded, insured, or combination of plans. So depending on the general, if you're paying out of general assets, whether you're funding the account, unfunding the account, and so forth, that's how it would also be exempted as well. So that's why they generally say the annual 5500 filing requirement, for those that have more than 100 covered participants at the beginning of the plan year would need to file a 5500. Do carriers provide this? Well, now I think you're getting more in a question of no. No, they're usually not doing 5500 filing. What is the deadline for the Erisa filing? It's the last day of the 7th month after the end of the plan year. So it always is at the end of the plan year. So if your employers are on a fiscal year, just plan accordingly. So an example here, if you have a calendar year plan, that would mean that it would be July 31st. A 2.5 or up to a 2.5 month extension can be granted. An employer would file through Form 5558, and they would file electronically through eFast2. So the plan administrator, as you see here in my note, must sign and file Form 5500. Okay, now the plan administrator could be a true third-party administrator that is performing those functions. It could be literally the individual with the employer that's considered the plan administrator, okay? And they would file Form 5500 as needed. All right, I'm actually going to forgo this poll question here just a second, and we'll catch it up here at the very end, all right? Because I want to back up just 1 second on the summary. Actually, on the summary plan description, some of the other things that are listed. I get this question, or we've gotten this question a lot, about summary plan descriptions and the detail that is needed in regard to providing a document for summary plan descriptions. There is no magic formula for drafting an effective and adequate SPD. Generally speaking, it must be sufficiently accurate, I'd say very much accurate and comprehensive to inform the plan participants and beneficiaries of their benefits and rights. Most of the SPDs should be written in a manner understandable to the average plan participant. It must not have the effect of being misleading, misinforming, and so on and so forth. When you think about an insurance certificate, and one of the reasons why I wanted to share with you and keep asking the questions, do carriers provide this, is that normally insurance companies provide a certificate of insurance, but it doesn't contain required references to Erisa, the number of plans the employer maintains, the plan numbers for Form 5500 purposes, the plan year, if it's different from the insurance policy year, the identity of the plan administrator and named fiduciary, It's not going to provide the Erisa model statement of rights. It's not going to explicitly cover COBRA, HIPAA, and other health mandated information that's there. So when you start to think about what that insurance certificate and contract doesn't provide, it is clearly not, the carrier is not providing an Erisa compliant document. And I just wanted to just re-emphasize that in regard to what the SPD can actually contain. All right. So let's talk about failure of compliance, okay? Failure of noncompliance, and we will wrap things up here momentarily. So guiding your clients through this Erisa maze, right? So I wanted to just show, just real briefly, an Erisa lawsuit. I wanted to just reflect something that there was a simple thing that this employer needed to provide. They didn't provide it timely, and therefore received a penalty. So this is Coltrona versus Nationwide Life Insurance. The issue was whether the participant was entitled to penalties, okay, under Erisa Section 502. And what happened, so the discretion was the plan administrator could be penalized up to $110 per day if they fail to provide certain plan-related documents within 30 days of receiving a written request. So I had mentioned that for an SPD, if you do not respond within 30 days of that request, you can start hitting that $110 per day penalty. Now at the end, as you keep going down in the bold, I just tried to make it more simple as far as what to look at. Through the court then imposed a penalty of only $55 per day, which equated to about $8,900 on the plan administrator, or simply waiting 7 months after the initial request of preparing those documents. Pretty interesting, isn't it? So the failure of noncompliance, if you think about this in this regard, there are no specific penalties for failure to prepare a written plan document or SPD. So as I stated that, you sit there and go, Steve, there's a penalty, right? Right. Yeah. There's not a specific penalty for the document. It's what do you do with that information, right? Have you delivered it to your participants and beneficiaries? Do you have the plan document, but do you also have the SPD? Do you also have the summary of benefit coverage? Have you provided the annual notices for WICRA and ACA and some of these others? So Erisa's general enforcement provisions allow suits to be brought where no document exists. Okay, so criminal penalties per conviction could be upwards of $100,000 or imprisonment. Fines can be upwards of $500,000 if against an entity. Failing to provide a copy of the SPD within 30 days of request is $110 per day. Failure to distribute an SBC is $1,000 per failure. The Erisa fiduciary breach, so just kind of specifically talking to a fiduciary, if an employer of yours was in this situation as a fiduciary, they can be held personally liable for any damages, and other penalties may apply, which could equal up to 20% of the amount recovered by the DOL in a settlement. Now, in a lot of the lawsuits that you see, a lot of it is centered around pension benefits because you can get a lot of assets out of that, a lot of penalties recovered in those types of settlements. So you see that in this fiduciary breach a lot on the retirement plan side of the aisle. Now, a big one here is Form 5500. Failure of noncompliance is a pretty big deal. $1,100 per day for each failure, and there is no statute of limitations, okay, on Form 5500. Now, the Department of Labor offers a delinquent filer program. I suggest you talk to your clients or those clients who have not done it like they should. Get into that program. That's going to help, help them get through that noncompliance. Just in the last lawsuit, this is a profit-sharing plan, but I just wanted to show it to you from an Erisa standpoint. Kujanik versus Houston Polybag 1 Limited, but they failed to provide a participant with plan information, okay, and this is what you typically see. They ended up, just based on that alone, okay, they awarded the participant $183,000 in damages and paid for the attorney's fees. So the plan administrator failed to provide the requisite documents. That's the key point that I want you to see kind of as part of this. So when you think about your employers, you think about prospects that you're speaking with, why are so many employers out of compliance? I've kind of listed 4 things here that I'm thinking about. One could be the overall lack of awareness, right? I mean, just not understanding. I mean, I hear about ACA, and man, I'm doing all that I can from an ACA perspective, but oops, I didn't realize I should be focusing a little bit here on Erisa as well. So just an overall lack of awareness. Secondly, carrier documents are thought to be compliant. So a lot of times employers of yours might say, well, I thought the carrier's certificate, I thought that was my Erisa document. Thirdly, there could be a lot of confusion, too, due to the complexity of the regulations. Listen, it's not easy. There's a lot of stuff that's part of that, so just a lot of confusion around that. And then lastly, just in my mind here, was prior limited enforcement. You know, the IRS has now hired 16,000 additional auditors. The Department of Labor announced just a couple weeks ago that they're hiring another 1,000 auditors as part of the DOL. And I think, a lot of employers haven't thought about Erisa because there hasn't been the level of enforcement, there. It's been limited enforcement. So what I want you to remember is that compliance is not an option. It's the law. So what's your next move for your clients? You need to communicate. You need to begin having these conversations with your employers specifically about Erisa, and I just threw up kind of some of these just simple questions. And what PrimePay would like to do, I wasn't able to get it done here directly for this webinar, but we'll have it sent to you, is an Erisa checklist. Many of you have really enjoyed our COBRA audit checklist, and we are going to provide to you an Erisa audit checklist that you can go right to your employers and start to just kind of go through, ask the questions that need to be asked so that you understand what the due diligence is needed for your particular employers. So one, do you offer any health and welfare benefits? Clearly, that's something that you're going to be deeply involved in, and you may know. But next question, do you have a plan document? Do you have a plan document? I mean, that's, if they're thinking the insurance contract is it, you ought to take a look at the insurance contract and certificate and see what is entailed there. Do you have an SPD, and have you distributed them to your employees? So within 90 days, they need to make that distribution, or 30 days within, based on a request. Have you ever amended your plans, which means, did you ever create a summary of material modification, an SMM, because that's a required notice under Erisa? Have you ever filed Form 5500, or are you considered a large employer? That's a great conversation to determine where you guys sit. You're right on the bubble. Maybe you should have filed 5500 and so forth. You could look like a hero having that conversation. Have you ever been subject then to a DOL audit? I will say this, that it is. We're seeing more audits occur just on simple FSA plans, HRAs. We see it on COBRA. We're seeing more. Clearly, there is more enforcement going on in regard to these types of plans, and Erisa will be a big one here. Let's go to our last poll question. You guys have been great with these. Let me pull up the last one here for the day. All right, I think this is a softball. All right, so does the insurance certificate or contract constitute an Erisa compliant document? Generally, no. Generally, yes. Always, or never. What do you guys think? So take a moment, go ahead and get in there and vote. Very good. As I'm waiting here, just a few more. I see one question, are Hsas that the employer sponsors subject to Erisa? The Qualified High Deductible Health Plan is an Erisa plan. Yes, indeed. Not the health savings account. Okay, so the health savings account would not be considered an Erisa plan. That's actually a trustee account, kind of like a retiree, an IRA, those type of things. So an HSA would not be an Erisa plan. All right, so let me close the polls. All right, let me share this. Interesting. So those of you who wrote generally no, you are correct. All right. I don't want to sit here and say that I have seen every insurance contractor certificate. I clearly have not. But I have yet to see one that would constitute an ERISA wrap document or an ERISA compliant document. You know, generally the answer would be no. It's certainly not always, but those of you who put never, not always true either. There certainly could be those that could be much more ERISA compliant. So let me hide that. All right, so just the last thing, that actually will conclude our webinar for today. You guys have put a tremendous amount of effort in the questions. Here's what we're going to do. I need one thing from you, the attendance sheets that are sent to you from Laura Kennedy. Please sign those, complete those, send them back to us. If you get those to us by Friday, we will absolutely have that credit in next week, no problem. So you guys have been great in the past, so continue to do a good job in that area of getting those attendance sheets into us. But here's what we're going to do. We recorded the webinar, so you will get a link of the recording. It'll be on our Broker Concierge YouTube channel. We'll also provide the slide deck. We're going to provide the frequently asked questions here today, and any other corresponding information like the ERISA audit checklist. All of those things will be delivered to you. As you can see, we will very soon provide you with ERISA compliant solutions. So just as you have entrusted us for compliance measures from ACA to COBRA to payroll to many other things, we're going to deliver that same strong sense of service, support, and expertise with ERISA compliance. So we're thrilled to be able to deliver that here soon. But with that, that will conclude our webinar for today. I can't thank you enough. Really appreciate your participation today, and we look forward to seeing you on our next monthly webinar. Have a great day.